Hi everyone, something strange is happening right now. Every expert said the stock market would fall apart by now. Even with election uncertainty behind us, every warning light is blinking red. But instead of crashing, stocks keep reaching new heights. It's like watching a car drive on empty for miles and miles without stopping. And here's what most people don't realize. There's a powerful force keeping everything alive. And once you see it, you'll understand why the whole system works the way it does. Stick around because I'm going to reveal the real timeline for what's coming and show you exactly how to prepare. Let me share something that shocked me when I looked at the numbers. There's a measurement that smart investors use to check if stocks are too expensive. You take all the company's total value and compare it to how much the economy actually produces. As of early November 2025, this ratio stands at a staggering 221%. Now, here's why that matters. When this number goes above 100%, it means stocks are overpriced compared to what the economy actually produces. Back in the late 1990s, before the technology bubble burst, this number reached 115%. After that, stocks dropped more than 60% in value. People lost trillions of dollars, but we're not at 115% today. We're at 221%. We've blown past the danger zone by a huge margin, and yet nothing has collapsed. Look at it another way. The S&P 500 is trading at a price-to-earnings ratio of about 31 right now. In a normal, healthy market, that number should be between 15 and 20. The historical average is only 19.5. Even fast-growing technology companies usually trade between 25 and 30, but 31 is beyond what makes sense for the overall market. Imagine going to a store where everything costs twice what it should. A $20 shirt costs $40. A $15 meal costs $30. You'd walk right out. But in the stock market, people keep buying at these prices. Why? Here's where it gets interesting. The United States government is like a giant money pump. Every year it collects roughly $5.2 trillion from taxes. Then it sends the money back out through Social Security checks, Medicare payments, military spending, and other programs. That money lands in millions of bank accounts across America. What happens next? People spend it. They buy groceries, pay rent, purchase cars, upgrade their phones, take vacations. All of that spending flows directly to big corporations. Those corporations report higher sales and bigger profits. And when profits go up, stock prices go up. But here's the secret part. The government doesn't stop at spending the $5.2 trillion it collects. In fiscal year 2025 alone, which just ended, the government spent over $7 trillion. That's a deficit of $1.8 trillion that it doesn't actually have. It borrows this money and pushes it into the economy anyway. This is the invisible support system holding up the market. Without this constant flood of government money, especially the borrowed money, stocks would have already fallen. But as long as the money keeps flowing, the market keeps rising. You might be thinking, why doesn't the government just stop borrowing and spending so much? The answer goes deeper than economics. For almost 80 years, America has been the world's leader. Countries depended on American military strength for security. They used American dollars for international trade. They wanted American technology and innovation. The whole global system ran through America. Nobody could challenge that position. Today, that's changing fast. Other nations are becoming powerful. China is building advanced technology and a strong military. India is growing rapidly. Many countries are working together to create alternatives to American systems. They want independence from U.S. control. This shift puts America in a difficult position. To maintain its leadership role, the government decided to keep spending massive amounts of money, even if it means borrowing from future generations. The strategy is simple. Spend now to stay strong until this transition period ends and America secures its position in the new global order. It's a gamble, but it's the gamble America's leaders have chosen to take. And taxpayers are footing the bill. Interest payments on the national debt hit a record $1.2 trillion in 2025, more than what we spend on defense. Now we get to the part that affects your wallet directly. When the government creates all this extra money through borrowing and spending, something important happens to the value of each dollar. It becomes worthless. Think about it like this. Imagine you're on an island with 10 people and there are 100 total dollars. Each dollar can buy a lot because money is scarce. Now imagine someone prints 100 more dollars. Suddenly, there are $200 for the same 10 people buying the same amount of stuff. Each dollar can now buy less than before. That's called inflation. And it's really just your money losing purchasing power. This is happening to the American dollar right now. And here's the twist that explains why stocks haven't crashed. Investors have figured this out. They're not buying stocks because they think companies are getting better at making things. They're buying stocks because they expect the dollar to keep losing value. When the dollar weakens, companies raise their prices. A $100 product becomes a $120 product, then a $150 product. The company's profits grow, not because they're making more stuff, but because everything costs more. And when profits grow, stock prices grow with them. So today's high stock prices might actually make sense in the future if the dollar keeps losing value. This is the hidden bet that's keeping the market alive. But this creates a serious problem for regular people. Who owns most of the stock in America? Wealthy individuals and institutions. The richest 10% of Americans own the vast majority of stocks. Most regular people own very little or nothing at all. So when stocks keep rising because of dollar devaluation, the wealthy get wealthier. Their investments grow in value. They don't feel the pain of inflation because their assets are going up faster than prices. But what about everyone else? Workers without significant investments. Their paychecks buy less every year. Food costs more. Housing costs more. Transportation costs more. Healthcare costs more. Their wages might increase a little, but not enough to keep up. The gap between rich and poor stretches wider. This is the hidden consequence of keeping the stock market alive through money creation. It helps people who own assets. It hurts people who live paycheck to paycheck. Warren Buffett, one of the greatest investors in history, isn't buying stocks aggressively right now. Instead, he's holding enormous amounts of cash. Why? Because he understands that this situation can't continue forever. He knows that eventually reality catches up, and when it does, prices will fall dramatically. He's preparing to buy quality assets at bargain prices during that moment. But here's what you need to understand. Just holding cash isn't enough for regular people. While cash gives you safety, it loses value as the dollar weakens. You need a smarter approach. This is where dividend-focused investing becomes powerful. Consider SCHD, the Schwab US Dividend Equity ETF that many smart investors already love. SCHD holds strong companies that pay reliable dividends quarter after quarter. These aren't speculative businesses. They're established firms with real earnings and cash flow. Why does this matter now? Because SCHD gives you two benefits at once. First, you collect dividend payments that provide income even if stock prices bounce around. Second, you own shares in quality companies that can survive tough times better than overpriced growth stocks. But you shouldn't put everything in one place. Here's a balanced approach. First, put 40% into solid dividend funds like SCHD. This gives you income and exposure to real businesses. Second, keep 30% in cash or treasury bills. This gives you the ability to buy opportunities when prices drop. Third, put 30% into protective assets like commodities or inflation-protected bonds that hold value when the dollar weakens. This balanced approach protects you from multiple scenarios. The timing question everyone wants answered: when will this correction happen? The honest answer is that nobody can predict the exact moment. Not in the next week, month, or even year. But we can see that the current situation can't last indefinitely. The government can't borrow nearly $2 trillion every year forever. The dollar can't lose value forever without triggering major problems. Stock prices can't stay at extreme levels forever. History shows us that when these corrections happen, they happen fast. The 2000 crash didn't take years, it took months. The 2008 crisis moved quickly. The 2020 pandemic crash happened in weeks. The next one will likely be swift too. Right now, you're at a crossroads. You can ignore everything I've shared and hope it all works out, or you can acknowledge what's really happening. That the market is being propped up by massive government spending and dollar devaluation. The institutions and big banks aren't going to warn you. They're positioning themselves quietly. But you don't have to follow the crowd. You can think independently and build a strategy that protects you. The choice is yours. Do nothing and accept whatever comes, or build protection now. The information is in your hands. What you do with it will make all the difference. Share your thoughts below, subscribe for more insights like this, and I'll catch you in the next video. Just a reminder, I'm not a financial advisor. This content is purely educational. Any investment decisions are your responsibility. Please smash that like button, share this with someone who needs to see it, and subscribe for more wealth building secrets. Here's to your investing success and profitable investing.